This is going to be a YouTube video on a strategy. We're using martingale strategy, and we are using it with Bollinger Bands. Martingale strategy, as you probably, if you ever heard about it, it's very famous. It's something that a lot of people are using for casinos, for trading the market, for many different ways of basically trading or gambling. Now, obviously, we're never gambling here in Bank the Binary, never. But what we're doing is we're combining the method or the equation of trading with a martingale strategy. What basically that means is very simple. We are adding Bollinger Bands to every graph we're looking at. Let's pick one. We can take this one, just increase it. I like to work with a 10-minute chart. You cannot see it, it's outside the screen, but it's a 10-minute chart. I'm adding Bollinger Bands. In case you don't know, I'm using Nedania. In Nedania, you have stations and chart stations and so on that you can use. What you're doing is you're opening a graph on instruments, assets, and by clicking B in the keyboard, B as in Benjamin, you're getting the option of adding the Bollinger Bands automatically. Just click Add, OK, and it does all the work for you. Okay, I'm going to go back to the other graph because this is more interesting to see. What I basically do is very simple. Whenever a candlestick, these of course are called candlesticks. Each candlestick represents the time frame of the chart we're looking at. If a candlestick breaks through the Bollinger Band, the resistance here or the support here, we are basically taking it to the opposite direction. So if I'm taking a trade here, when I see it breaking through the Bollinger Band and I'm taking it down, this trade specifically I would win. So far there is no martingale strategy here, but this is a very convenient way of finding trades. It broke the Bollinger Band, we're taking it down. Okay, why would we use a martingale strategy? Is because, for example, here, if we see that it breaks the Bollinger Band, we'll take it up here, and we will lose because it kept going down. So what we're doing is, for example, if here we were trading on 5% from our capital, as it's the recommended amount, on the next trade we will take it for 7.5%, 8%, which means we will take the amount of money that we lost. Let's say we have a $10,000 account and we took a trade for 5%, which will be $500, and we lost that trade. If we won that trade, we'll get about $860. So we lost that trade, so we need to take the next trade to win $860 plus the 500. Okay, $860 which we were supposed to profit plus the 500 that we lost. This will be the next trade. That's why it's called martingale, because you're basically taking a higher trade with the profit that you were supposed to make. So eventually, when you will win, you will get all the sum of that money together. This is a nerve-wracking strategy, by the way. It's not for people that are that like to play it cautious. I have many videos of other strategies that are much more cautious, much less dangerous, much more secure. But this way of trading is also very profitable, but you got to have a strong heart. So we lost this trade. We took it again here for 8.5%. We lost that trade also. And we took it again here for about 12% or 13%. I'm not doing the math right now. So on this trade, we would break even, and we take it again, and we would win. So eventually, we would win and get all our money back plus profit. That's a very simple strategy, martingale strategy. Let me find another example here. 1, 2, 3, 4 trades out of the money. 5th trade will be in the money, making profits on all these trades. Again, one trade because it broke the Bollinger Band support level, and we're taking it up, but it didn't go up. So we're taking it here up again for, as I said before, the amount of money that you were supposed to make plus the amount of money that you lost. And we lost that one too, so you're taking it here again. We lost that one too, we're taking it here again, and you won. And when you win, you get all this sum of profits together. That's why, by the way, it's very important to have liquidity in your account. Not just in this strategy, but all the strategies that we have in Bank the Binary that we're using excuse me, are very important to be liquid, because sometimes you have to make up for the last trade and you have to open or double a trade, or you have to have the ability to play around with it. And if your account is very small, then you're stuck. You cannot move forward, and then you just lose money. That's why you will hear a lot of brokers telling you to invest more. Okay, it's not something that we care about because we're not getting profits on deposits, but we are getting profits on your profits. in our payrolls. So we care about your winning rates. So you got to be liquid. That's part of it. Now, this is a very simple strategy. So far, we're doing very nice today. Let me just show you a little bit. Expired positions. 1, 2, 3, 4, 5, 6 out of 7. This is only the martingale strategy. Okay, only the martingale strategy. I was Richard Keats from Bank the Binary.